What's going on, future me? Hope all is well. This is actually my second time recording this because my screen froze the first time. So hopefully this goes a little bit smoother. Merry Christmas to everybody. Happy holidays. Happy Hanukkah, Kwanzaa. Feel me? Very inclusive here on this channel. So with that, of course, as with every week, want to get into my pre-market plan for this coming week. It is going to be a short one, though. Obviously, with it being the last week of the year, last week of the quarter, not too much to cover. Not a bunch of observations to make. I did take one trade last week as well that I'll be covering and everything else. But overall, just to jump straight into it, as we can see, we have the dollar, the daily for the DXY pulled up at the moment. And nothing super crazy. Nothing super crazy to necessarily observe. As I mentioned, let me actually start on the daily here, or the weekly, or excuse me, the monthly. As I've mentioned in previous pre-market plans here as well, we did have this move into 103, that 103 sort of 50 sort of wick there as well. So that's pretty much played out. Looking at the weekly here as well, we do have clear weakness, a potential even in a potential morning star back into the level of structure that we just broke out of. But I'm not necessarily calling for anything crazy. I'm literally just sitting back and observing the dollar as it stands. Not a ton of catalysts to make this thing move for this particular week. As we get into January, though, of course, the first week of every month is typically NFP, so that's something to look forward to as well. But as it stands for this week, I believe we only have like USD unemployment claims on the 29th and then the 30th, USD Chicago PMI, and then I believe on the 27th. On Tuesday, we have the Bank of Japan putting out their CPI numbers there as well. So not a huge amount of press releases this particular week or anything that would lead me to believe that we're going to be seeing crazy moves within the dollar. When we look at it on the daily here as well, we did already break out of this bouncer break sort of level to the downside. So we are seeing clear dollar weakness. Nothing super crazy either as far as a reclaim is concerned. We have broken through this channel just slightly, with not a huge amount of momentum there either. So nothing, again, nothing that is particularly catching my eye. Of course, the only thing that would sort of interest me would be reclaims of this level, this 105 sort of 50 area, this bouncer break level that we just moved into, or retest of that level before moves lower. Of course, I would love to see more dollar weakness, especially after the longs I've been calling for on gold and have been taking. So with that, once again, especially since we're at such a sort of still a pivotal level on the chart, being this bouncer break level here as well, I'm just going to be sitting back and observing as far as the dollar is concerned to see if we get further downside or if we actually reclaim this level on the daily. So pretty quick and straightforward on the dollar. Definitely a little bit more interesting when we look at JPYBasket. Let me pull this up here. As we can see, right, the Bank of Japan did put out their monetary policy statement last week, I believe on Monday, Tuesday sort of area. Basically of the same sentiment. They're going to continue to print as much money as possible, buy as many of their own bonds as possible. There was one small surprise and one sort of small change that did act as a catalyst for this particular spike, though, in that basically the rates in which, or rather the band of rates within the Japanese bond can move has been increased. So initially, the rates of the Japanese bond can move between like 0 and 25 basis points. They've now increased that range from 0 to 50 basis points, taking the market by surprise, and in turn, basically bringing in a bit of yen strength. So that's kind of where we're at the moment. I know that I did mention that I was wanting to see a decoupling of both the yen and the British pound, and that's exactly what we saw with the monetary policy statement release. Excuse me, that's a tongue twister. But that's exactly what we saw with the release of that statement. Of course, the yen started going parabolic into that 8,000 level and eventually breaking it, while on the other side of that, the British pound started to see weakness and basically roll over on itself, and everything else. So as it stands, right, especially with the big move that GJ made off the strength of these news catalysts, I would of course be expecting to see a retrace. You could also see that reflected in JPYBasket here as well. Most likely place for me at least to see a retrace would be the structure that we just recently broke out of, this 8,000 sort of liquidity zone, this SR level here. So I would be expecting early in the week a move at least into the 8,000s before a push higher if we do get that, unless we reclaim the 8,000s and below. And again, I would expect it to reflect on GJ quite well. Also, just in that, after all the bearish momentum that we've seen, we should be seeing a, price trying to claw back and retrace the different levels before we can continue to go short. So just making that clear for my future self. Moving into the British pound. Let's get this pulled up here. Okay, perfect. Moving into the British pound, as we can see, right, this is exactly the decoupling I was just mentioning here as well. As you can see, we have this pretty fickle trend line. We also have this local range high, this local top that we recently were playing around at. Did try to find stability here for a little bit before engulfing lower and basically rolling over on ourselves. And eventually breaking this trend line here as well. So it's not looking very good for the pound or pound strength whatsoever. We are still sort of in an uptrend, but as far as finding a floor is concerned, we do have this level of microstructure around 119, and then we also have this level that we just broke out of around 117. So those are two levels that I'll be interested in taking a look at once price does get there, to see if we find stability there at all, or if we continue to fall lower. But once again, as long as the yen and the pound are moving in different directions, as long as those charts look the opposite of each other, I'm happy, because that means that GJ is going to be trending in one direction or another, and overall structure will be a lot cleaner with those two charts being decoupled from each other finally. Because for a very long time they were moving up together, very similar structures and everything else. Excuse me. So overall, once again, just glad to see the decoupling of those two pairs. When we look at it on the monthly here as well, right? Very interesting observation I made here on the monthly. Look at this monthly wick, right? Look at this long wick rejection to the upside. And this is something that I did cover on previous pre-market plans here as well with this monthly candle close here back in November. Is that awesome? Very small nuance, but we have a ton of momentum into this level, but we didn't get a solid body close above this sort of SR level, this level at around like 120, 130 sort of area. Just wicked straight into it. So very small details, very small little, pieces to the story that add a bit more context, and overall makes a case for why we're seeing this big wick rejection to the upside here as well, right? Not finding any sort of momentum above this SR zone, and could spell out a potential evening star and move lower on this coming month's candle. Still 5 months left or 5 days left in this month, so anything can happen, but I definitely don't see us regaining momentum to the upside and breaking this level in those 5 days. So of course I would have to expect the other side of that being weakness. So that pretty much sums it for the pound. Of course, as we're seeing yen strength, we're now seeing pound weakness, which would then call for GJ shorts, which I'm completely fine with. I did call for shorts last week here as well. I would just, again, like to see these two charts remain decoupled as we move into the coming weeks. And this is the weekly here as well. As you can see, big play into the 618. We're now rejecting and reclaiming range levels below that we just broke out of, as with 121 and lower than that here as well. So we could see a retest of the level or SR sort of liquidity zone, whatever you want to call it, level that we recently broke out of in confluence with the 382 there as well. So I hope that makes sense. Let's move into GJ, the pairs that we'll be trading. And I actually didn't take a trade on GJ. Look at this weekly candle, right? Like, it's nuts. One thing I do want to mention here as well, I did basically call for GJ shorts, especially being that we were squeezing, right? We were literally respecting this trend line for so long, playing around at this weekly range high for so long. I literally mentioned in my previous pre-market plan that, hey, we're at a very pivotal point in the chart. A big move is going to happen, whether it's to the upside or the downside. Time will tell. We'll just have to see. But a big move is getting ready to play out, especially being, again, that we're squeezing into this level, this sort of June high, weekly range high, and everything else. Failed to stay above it, rejecting it multiple times, longwood rejections and everything else thereafter. It just felt right to call for shorts, especially, again, after the week of the 12th candle close. Like, look at this, look at this wick to the upside and solid body close thereafter. Was definitely wanting to lean more towards shorts, and that's exactly what we got. Literally within a day, 2 days, my entire plan for GJ played out. This is like an 800 pip candle, 850 pip candle. Absolutely nuts. So with that said, right, we're moving back into previous weekly ranges, one in particular being this level at 157. We did wick into this sort of liquidity zone, just playing around right above it. With that in mind, we could, one of two things, right? We either stop up here and start to reverse and retrace it back to the upside, or we made a more definitive move into 157 and the downside, wick from there and then move up, right? So those are two sort of scenarios I'm looking to see, where we land on as far as those two scenarios are concerned. And obviously it becomes a lot clearer on lower time frames, but just from the weekly perspective, I don't see why we wouldn't be getting into the 157 sort of region, especially after a solid body close below this 161, 162 sort of range mid. Because as we've seen looking left, right, we always just wick into this range mid, never solid body close. But when we do solid body close, we solid body close with strength, right? We always move back into those previous range highs around 157, 156, and everything else. So I would expect nothing less with the following week's candles. Excuse me. One observation I want to make here as well, just on a macro sort of time frame perspective. Monthly cup and handle, right? 5 days left in the month. We are also breaking back below this sort of structure that made this monthly cup and handle valid, right? So if we can stay below this level around 162, 160, 150 area, it's invalidating the cup and handle, right? 100% looking like it's not going to play out. And that's completely fine, right? Just overall, when I look at it from this perspective on the monthly, right, it just adds a little bit more conviction that we're going to be seeing lower levels around 157 and 156 as well, just to retest the previous ranges we broke out of or break back into those ranges. Also, another observation here as well, just macro time frame stuff. The quarterly. Look at the quarterly candle. Look at this wick into the quarterly candle, this level of structure, also in confluence with the 618, right? How could you not have strength in your conviction to be like strengthen a bearish conviction? When you look at a chart like this, right? Like, look at this rejection. Absolutely disgusting. It almost, spells out moves into the 150s and everything else, like much lower than what we're trading at the moment. But of course, it's going to take time for that to play out. Much more like macro level stuff, larger time horizons and everything else. So we'll go ahead and look at the intraday levels here as well. Looking at the daily, when we look at this daily chart, right, I would love to see a continuation to the downside, but when I see this sort of rounded bottom, especially in a level that we've bounced from looking left, right, time and time again, 1, 2, 3, 4, 5, 6, 7, more than 8 bounces from this level every time we play into this zone, I don't see why we wouldn't get like a 9th or 10th bounce from this level, at least into the weekly, into the previous daily range mid around 162, or that neckline that we broke out of at 164, right? So basically 2 levels on the daily from a daily perspective that I'm looking at for a retrace being 162 and that 164 neckline sort of area. 164 is a little bit more of a stretch, especially because we'd have to close with strength above that 162 area. So 162 would be a bit more ideal for shorts for me. But overall, I am of the sentiment 100% that we're going to be having to retrace this particular move, right? You don't get a huge candle or huge breakdown like this without having a retrace and having price trying to claw itself back thereafter. Of course, again, would love I would love more momentum to the downside, like a break and retest of one of these different levels at 158. Lower than that, awesome. But it just doesn't seem likely to me, especially with this rounded sort of bottom that we're seeing here. And of course, off the strength of the momentum that we saw prior, we have to see some sort of retrace before a move lower, in my opinion. And that becomes a lot clearer on lower time frames. So we'll look at the 4 hour, and you could almost definitely make a case for like, I would be getting long on the retraces into the levels I want to short. So for example, like awesome, I could play this channel break into the 382 around 162 and break and retest into the 618 at 164. 2 great longs. 100% agree with you. Just not the way that I'm going to be trading it, especially since we're overall shifting market structure, bearish overall, especially on the weekly. We look at I just showed you the monthly and quarterly as well. We're all looking like shit. We're all looking bearish. So I want to remain of that sentiment when I'm looking at intraday levels as well. So while you could trade back into these levels and then short it thereafter, just not the way I'm going to be playing it. We found a little bit of stability at the August low. Of course, if we break and retest below that August low, that's something that I'll entertain and play into that previous range mid at 156, 157 sort of level. On the other side of that, if we continue to retrace higher and make moves into previous ranges that we broke down from, like for example, this 382 in confluence with that 162 sort of area or 164, I'll be letting price move into those levels and waiting to see the reaction of those levels to see if we find enough weakness to get short there, right? So if we come into 162, we find a weakness, and I feel that we're going to get a knockback there. That's what price is showing me. I'll take a short there all day. No question. No, you know what I'm saying? Like, I'll take it all day. if, on the other side of that, we go a little bit higher, we retrace all the way into the 618 in confluence with 164 where we broke out of, and, where we have a very well-defined level of structure there, I'll be taking shorts from that level all day, no questions asked, like 100%. One thing to be weary of here as well is that there's no traffic looking left. Like literally nothing's going on in this particular area outside of the stability on the August 22 low. So the moves and retraces into these previous levels can be quick, right? They can move like butter into these different levels here as well, especially since, again, there's no price action or consolidation to kind of make it choppy into those areas. So the retraces can come quick, and of course you can capitalize longing in between these different retrace levels. Just again, not something that I'm going to be doing. 2 levels once again, or 3 levels rather. First being 164, I'll take shorts. 162, I'll take shorts. Breaking retest below the August 22 lower on 159, I'll take shorts. Very simple, very straightforward. Hope that makes sense. Going into the 1 hour. This is where, the overall intraday range becomes a lot more clear. It also adds another level I'll be looking to short from, right? So as we have, the 162, 162.50 sort of area and 164 to short from, we also have this more recent range high at the October 22 low at 160.66 here as well that we already rejected, right? We've rejected here a couple of times. We also have this very fickle trend line here that we're playing around at. So with that in mind, right, I would still want to see how we're looking at the 160 sort of 50 area, 160.66 sort of area to see if we reject from there to take shorts. If we reclaim this level and make a bullish move into the 162s, once again, I'll be sitting on my hands and not playing it. I will be waiting for the 162 retest and 164 retest to see if I can get short at those 2 levels. I will not be getting long. Okay. So I hope that makes sense overall. And again, I'll be playing breaks and retests below the August 22 low into the last week's candle low and lower than that as well. Overall, just looking for shorts, not longs whatsoever. Unless, again, we break above that June high, as I've mentioned time and time again after many pre-market plans here as well. So with that said, we have, potentially this ascending triangle here as well that could make a case for longs into those levels that I'm looking for retracements at. But once again, I am not going to be looking for those longs. So I hope that made sense. Once again, just kind of recap, I'm looking for shorts at this particular range high here at the October 22 low, 160.66. If we surpass that, I'll be looking for shorts around the 162 region. If we surpass that, I'll be looking for shorts at the 164 region. If we reclaim 164, I would almost consider that like a bullish reclaim, and I'll be looking for levels of structure thereafter to see where we sort of land. Again, I'm not really comfortable taking longs above or rather below the June high, especially with obviously all the price action that we've seen and the grinding that we've seen into that level before big knockbacks. So that's just going to be my sort of sentiment, my sort of way of playing it, and I hope that makes sense. So going into gold has been very good to me lately. At least structurally, it just looks very clean. Nothing super crazy going on as well. So it's just been a very good pair for me to trade overall. We'll start on the weekly. Looking at the weekly, right? Lots of indecision candles here, right? Long wick rejections into this weekly range mid. As I've mentioned on previous pre-market plans, I would like to see strength into this weekly range mid to stay bullish. As we can see as well on lower time frames, we've been using the 1780s as a very strong level of support as it stands, right? There's not a lot of traffic under this level as it stands anymore either, especially on intraday levels. So this sort of makes the 1780s a bouncer break level. I, of course, would love to see more stability above the 1780s to remain long. But off of the last 2 daily candles here as well, right? We have this potential evening star, long engulfing candle to the downside into that 1780 area, and the most recent daily candle close just looks ugly overall. So I'm not expecting too much, but if we can maintain stability above the 1780 sort of region, it's going to be looking good for gold bulls. Overall, I'm still of the same sentiment of being bullish above 1780, above 1770, and overall bullish above 1756. It is when we break below 1756 that I am no longer bullish and would consider taking shorts thereafter. So I hope that makes sense. Looking at it on the 4 hour, it always becomes a lot clearer on these intraday levels. as we can see, right, and this is a trade that I'll cover here as well on the 1 hour. But as we can see, we literally are at the mercy of the 1780 range, and we always bounce from this level of structure, right? We have 1, 2, 3, 4, 5, 6 bounces from this particular level, and we continue to make a case for buys at 1780. We literally, anytime we find stability, we find strength above that level, we always move with good momentum into that range high, that 1805 sort of area. We're also making sort of lower highs higher highs and higher lows here as well. So still have a bullish structure and sentiment overall, and I'm going to be obviously remaining of that sentiment as we move into this coming week. For me overall, the 1782 sort of area is a bounce or break level for me as it stands, at least for me more so near term. The real big, bounce or break level is that 1756 area. But overall, since we found so much stability above that 1780 level, it is at this point sort of bounce or break. Because, of course, only one of two things can happen when we come into that level. Of course, we've seen it bounce more times than it's broken. So that's why, of course, I've strengthened my conviction in taking buys from this level. But excuse me. This coming week, though, I'll be looking for the same exact play as we see back here. I'll be looking for a retest of the 1780s to play it into 1805 and higher than that. If I get a break above 1805 and retest there, I'll be taking it from 1805 into 1829 and playing it level to level as I always do. Looking at it from the 1 hour, becomes extremely clear how strong of a level this 1780 level here is as well. Excuse me. Anytime we come into this level, we bounce. We 100%. We find stability. We bounce all day, every day. So that's exactly what I'll be looking for this coming week. We also have a short, very small fib confluence here as well that we have from swing low to swing high. Something that I'll entertain here as well as far as longs are concerned. Would still love and prefer to see that full-on retest of 1786 to get long, but if we have sort of a more of like a higher low sort of structure play out on that 618 level, I'll definitely take it from there also as far as longs. And then we still have the 1770s that I'm comfortable taking longs from, and then 1756 there as well. So obviously each of these levels I'll be open to taking longs from as long as we find stability at those prices. I'm getting long all day. So that pretty much sums it, as well as above that, right? Like, if we get a break above 1801 retest, I'll take that higher there as well into 1823, 1825, and everything else. So pretty straightforward, literally just playing the break and retest of these different levels overall of a bullish sentiment. So only looking for buys as well. And I hope that makes sense. Pretty much, pretty straightforward, super self-explanatory. If you don't find that straightforward and super self-explanatory, then there's something wrong with you. I'm sorry to say. But yeah, with that said, we can cover my most recent trade on gold. I only took one trade, as I mentioned, this last week, and it was this one. Beautiful trade, very well executed. Only one thing that I would really have done different. But overall, why did I take this trade? What did I feel during the trade? What went on in my mind after? We'll start with why I took it, right? So one thing, as I mentioned in my previous pre-market plan, I did mention price was trading around here. It already broke through the 1780s. Price was already playing around in this level, above this level. So I did mention, hey, I'll be playing breaks and retests above the 1780s all day, right? So off rip, we already saw that break and retest above 1780. That's exactly what I was looking for before I could get long. That literally was the biggest piece I was looking for before getting long, and I saw that here, right? I had I'd seen this big momentum to the downside, this big engulfing candle, and then the following candle thereafter, basically finding a floor instantly, right? Like, we, even with this, this much momentum playing into the 1780s, we still rejected it, whipped into the level, and found a bit of strength, right? So I didn't get long in on this candle in particular, but this is what made me take my fib from low to high and notice that this is also in confluence with the 618. So we just got a 618 retest after this particular breakup structure, which of course strengthened my conviction to get long. So now for me, it was just really a waiting game to make sure that we found stability above that level. And when I look at these next two candles, of course we have these two candles, awesome, and then those next two bearish candles right here. even with the amount of momentum this second bearish candle had, I noticed that we didn't close back below the 1780s, like the 1786 sort of level, and we had 2 bullish candles follow up thereafter. It was really these 3 candles that summed it up for me and gave me the last kind of bits of confirmation that I needed to get long, though. As you can see, right, we tried to make that move lower into the 1780 sort of region, but we make long wick rejections to the downside. These wicks were everything for me, right? So when I saw these wicks, I was like, awesome, we found stability. I can get long here. I was a little bit iffy, right? It wasn't until this third candle right here that I saw this long wick to the downside and this sort of solid body candle sort of forming, right? It didn't have a ton of strength or a ton of stability here, but it was, it did show a bit of strength, right? Long wick again to the downside. It did have a fairly solid body, and that was more than enough for me to signal, or rather to signal to me, and say, hey, it's time to get long. We also had this channel break here as well, and overall, we were above the 1780 sort of area that I wanted to get long at. That was part of my plan, and I was already of the mindset that, okay, it doesn't matter, if I lose the trade, win or lose, doesn't matter as long as I follow my plan. It's when I don't follow my plan that I'm going to have issues. Like, it's going to be a problem. You feel me? So all I had to do was execute at that point. It lined up with my plan. This is what I said in my plan. This is what I wanted to do within my plan. This is what I wanted to see, where I wanted to see it, everything else. So now it's time for me to execute. If I don't execute here, I'm a pussy, right? So, of course, we all know that I'm not. Otherwise, I wouldn't have executed here. Like, I hate to make it vulgar, but like it comes down to that, right? Like, are you gonna execute? You're gonna press the fucking button or not? Like, what are we doing here? I pressed the button. I won. It was great, right? And I even had other opportunities here as well to scale in after this big engulfing candle. This is actually after the Bank of Japan monetary policy statement. I basically got to ride it up from here as well, because within that statement they also mentioned that commodity prices were a bit high, which I guess was, it pumped the gold up a little bit here as well. So I saw that nice momentum there thereafter, and then I also had a retest of my entry that I could have scaled in on. I didn't, because after I executed the trade, I went away. But that was also an opportunity to scale in there as well. And I will say as well, active management, as I mentioned, is always going to be like my downfall type of thing. I did take profit, like $1 short for my TP. That wasn't really that big of a deal, because it was like literally like $1 away, like 1805 type of thing. But if I would have held it overall, I would have seen another retest above that 1801 level right here, and I could have been in the position to scale in thereafter even further and really maximize this position, because this was, I gained 2.5% on this. I could have potentially gained 10% on this with the scale-ins and everything else. So just something that I could have done better, improved on as well, just overall, especially when I have like a very low drawdown entries like this. Like, this is a perfectly executed entry, beautiful. So when I look at it from that perspective, I definitely have to maximize those kinds of positions, be on the lookout for retraces, especially after we have news events and catalysts like that, and we're starting to see clear momentum to the upside. I should be perking up to the idea of, I could scale into something like this, or find a bit more upside in this particular position. But overall, once again, I think it was a great position, executed very well, followed my plan to a T, and I'm satisfied with it. It doesn't even matter. Like, I'm not even excited about it. Like, it's just another fucking day. Like, I'm ready for the next trade, honestly. But that's my trade. That's why I took it. That's why I stuck to it, and that's why I was successful. So I hope that made sense overall. That's pretty much my pre-market plan, just again to some gold. I'm looking for literally the exact same play. It would have been beautiful for me to catch this here as well, but there was so much momentum to the downside. I didn't want to catch like a falling knife. But again, literally looking for the exact same thing. Nothing super crazy outside of that. Pretty straightforward, self-explanatory. And with that said, I hope future me, I hope you're living your best life, bro. I hope you're doing your thing, living to your utmost potential, having a very merry Christmas, a very jolly holiday, and just doing your thing, bro. God bless you. God bless everybody that's watching. Take care, do your thing. And yeah, God bless. Take care.